All right. Welcome to Weekly Roundup. Scott, that's Ben. Glad to be back. August 11th, 2023.
Mm-hmm.
If you just heard us talking in the background there, a bit of a slow news week, but never a slow week around here at the Hart Investment Group.
Nope. True enough. There's always something to do.
That was what they call a segue, Ben. Why don't you let us everybody know what's been happening this week?
So lots still going on in the world, even though I'd say from a news perspective, there's maybe a little bit lighter. We had some earnings this week. Disney had earnings, and a lot of press today about Canadian Tire's earnings as the lifeblood of the Canadian economy. And so Canadian Tire's earnings effectively said that the consumer is stretched and tapped. And so Canadian Tire is a reasonable place because they not only have stuff to buy, but they also have a pretty big credit card division as well, and lending and GICs and things like that. So they get a pretty good gauge for the health of the economy. So that was good. Obviously, a few more deals we commented on, Barstool Sports and Penn and ESPN and things like that. So those, what else did we had? We had Tapestry and Capri. Tapestry buying Capri, which is all luxury brands, Michael Kors, Coach, Kate Spade, those kinds of things. So still lots of corporate activity going on in earnings, but from the economy, inflation data has come out a little bit this week, generally lighter than expected. So we'll do a couple charts on that. But world continues to charge on, but there wasn't like a big material event, unless you think that Zuckerberg and Musk fighting is a big event.
Big ticket. Big ticket. I don't want to see those guys fighting.
Yeah. So they're in talks to fight at the Roman cathedral in Italy. That's the current buzz.
That's ridiculous. I think people would get a better kick out of you and I fighting than those two. What do you think?
I think so. I think so too.
Also, similar to them, different weight classes, I think. So, all right. So, you got some slides for us?
Yeah, for sure. Well, just if you listen to us talking there a little bit, I was trying to find some positives within the mark a bit, and didn't find too much, but I'll take you through kind of the thoughts, and if it means anything to us, if we need to change anything with the portfolios. But presently, no, not too much really changed in the world, but a few. Oh, how come that wasn't popping up? All right, there we go. All right. Just let me know if you can see it to there.
Yeah, you're good.
Okay, perfect. Yeah, so continue to talk about growth and inflation continues to be the major driver of what's happening in the world. Central banks had a good conversation with a portfolio manager that also kind of follows the different quads of the different economic cycles that we're in, and had a good talk, interesting, just about what he's seeing on flows and activities. And essentially it lines up with what we're looking at here, which is CPI less shelter, annualized quarter over quarter, is effectively back to the levels that they'd like to see. So probability of a FOMC rate increase in September is something hovering around 10%, so extremely low. Unless we get some surprise revision on GDP or inflation, I'd expect that there's no rate increases here. So this is a look at the metrics that the central bank looks at in the US. Did the slide change there when I clicked it?
Yep, sure did.
Okay, perfect. So the other area that obviously we look at a lot of different things, but this chart I thought was quite interesting. Probably not a huge surprise to people, but this was some research from Hedgeye this week that I thought was quite interesting. was really the look at first American confidence in government, and second was the American confidence in the media. And so when we look at the media, like I'm sure people probably know this generally because they have I guess, a distrust for media in general. But if we look at the confidence in media for newspapers and television, you're looking at 10%-ish to 20%-ish, extremely low levels. If we look at American confidence in government, it's something that we've talked about a little bit. The military has always been the highest, or at least in current time, the military has been the highest trust and confidence. But even that in the past couple of years have been falling based on a few decisions that have made here. So, general feeling of distrust in most things. These were a couple of interesting charts to think about. And so you always take everything you see in the news with a grain of salt. And I'd say the next chart is probably one where I think we need to consider when we read these news headlines, particularly as these newspapers and such are continuing to lose and are struggling with readership. They try to get these clickbait headlines for you to pay attention to. So this one popped up a lot in my feed throughout the week. And so certainly wanted to comment on it. I don't know if anyone has seen this, but these headlines are coming out. Lenders now seeing 60, 70, 90-year mortgages as Canadians struggle with rocketing interest rates, almost to the view that you can walk into the bank today and say, I want a 90-year amortization. It paints it as a negative thing, but I'd take that all day if they let me. But because of these variable rate products, what's happened is that they had fixed payments. So a lot of the lenders have fixed payments. And so as your payment doesn't cover your interest anymore, amortization stretches out. So you still can't walk into a lender and say, I want 60, 70-year amortization. The max in Canada is still 30 years. Certainly maybe something will change depending on what happens with the housing market, but this is a clickbait headline and certainly not one that has any validity to it at this point. Like that clickbait headline. The other stuff that we're seeing is continuing around financial conditions. And so, Canada and US individuals are facing similar levels. And so this one continues to be one that I pay attention to, certainly. So this, if we look at the black line, so this is new consumer foreclosures and bankruptcy on a 2-year average growth. So that'd be how quickly foreclosures and bankruptcies have been growing in the US. Canadian data is again quite similar. If we look at when the last time we were at these levels, around the year 2000. Year 2008, excuse me. And so as we start to edge up towards those levels again, it's certainly something that we need to continue to be conscious of. And I think continues to say to me that growth continues to slow quite quickly. Inflation is also slowing quite quickly now. What's the last piece that we've been waiting for before rates go on hold and then ultimately be cut at some point is we need that employment number to start to tick up. And we've only seen early days of it. And I guess kind of the last piece from what the market signals might be is we need a flattening yield curve. And we've started to see that where the long end is coming up and the short end is coming down. So you're getting a flattening yield curve, which is another signal that the market's telling us that we need to pay attention to. The last piece would be bank lending standards and financial conditions. So if we look at this chart here, we look at these levels. As you know, I like when we see these divergences, it tends to signal something in the markets that we need to be conscious of. And the red line would be the tightening lending standards, and the white line would be the financial conditions index. So obviously, if your financial conditions are getting worse and lending standards are tightening, that's a bad recipe for economic activity and GDP growth. So as we see these diverging signals, it says, what do we do? And so what it continues to say to me and to us is that you want to have exposure to some US dollars, you want to have bonds in the portfolio, you want to have a bit of cash and liquidity. Companies potentially that you've seen sell off as a result of being quite leveraged, they'd present opportunities for buys through here. So a lot's going on in the markets and the portfolios that we need to be conscious of. So I think that's it for the charts for today.
Great. Great
yep.
job.
Yep. Thanks.
Great job. Great energy today, Ben.
Thanks.
You really brought it with the charts. All right. What are we looking for? We're looking for a little more excitement for next week, or just kind of dog days of summer type markets?
Yeah, so I think one of the things that we've covered on and off over the years here, just in the crypto space, and I know we haven't talked about it too much lately, but yeah, it continues to be front and center if you follow it and track it. And I think probably 3 or 4 weeks ago, I talked about BlackRock finally filed their Bitcoin ETF, and the SEC asked them to go back and say who's going to be your custodian. Came back with Coinbase to be the custodian, and so did Fidelity. Said Coinbase. All these issuers were saying Coinbase would be their provider, and ARK has filed 3 times now, and they were just asked to put together some more information to get their filing in place. And so I think this continues to be a major piece or major stumbling block for how you get massive growth in the space again, which is that ETF provider. And BlackRock and Larry Fink continue to talk about, he says, this should be in everyone's portfolios. So at some point, I think we're going to see Gensler and the SEC come forward and approve that. But Cathie Wood's been pushed back again, another request for more information from the SEC. So that happened this week, but I think market activity wise, volumes continue to be light. And to your point, I don't know if we said that when we were recording, but tech and growth has rolled over a little bit here the last couple of weeks. So we'd be paying attention to that. Anything need to be done here in the event we need to be a little bit more defensive with some of the growthier stuff we have. So I'd be paying attention to that pretty closely, because historically September, October have been more rocky periods for the markets anyways. So be paying attention, try to be prepared for what's coming ahead.
Gotcha. Okay. Any final thoughts before we cruise into the weekend here?
No, I don't think so. I mean, I guess the final thought, which we try to mention, is we're still updating forms, and if Renad reaches out to you to update or sign something, certainly please get back to her or us if you have some questions. So we're still doing that, and making sure everything's tidy and in place. But no, I think that's it. I think obviously we did that presentation a little while back on the executor, so we're looking to line a few things up for the fall as well, so working on those too.
Definitely. All right, everybody, good to be back, good to see everybody virtually, and we'll see you next week.
Sounds good. Thanks. Take care.
Bye now.